Let me see. Let's see. So I'm just going to show. As I said. All right, hopefully you can see the screen. Let's see. So, trade recap December 31st. Happy New Year's Eve. Traded futures today. I trade futures every day, or at least I look at trade recaps every day for futures. And so the goal was to just make sure we had a clear entry. I feel like what's today? Today is Wednesday. Yeah. So Monday and Tuesday price action was not great. It was pretty choppy. Let me get on the 5 minute. Price action was pretty choppy previous days. For me, not much direction. So today it was just about focusing on whether or not price action was going to make sense. If it made sense, then I was ready to put enough into the market. If it wasn't going to make sense, then I wasn't going to bother at all with it. So I draw a lot of lines. They're not support and resistance lines. They're like draws on liquidity, which I guess can be seen as support and resistance, but I don't usually look at it that way. Um, and I trade NASDAQ and SPY or ES or S&P, however way you see it, depending on how you trade. So my trading style kind of, I do the same thing over and over again, which creates consistency for me, and then it allows me to excel and do a lot better. So I always draw my 1800 mark here, which is my way of saying, previous day market is closed and now we're entering into Asian market. So I mark 1800 with this dash line. I mark 3 a.m. to mark London session. I mark 8:30 for pre-market, 9:30 for market, and 10:30 to say this is the end of when I plan on trading. I try not to trade beyond 10:30 a.m. Eastern time. So when I mark that, it allows me to see each session, to see what each session does. Asian session will accumulate. London session will manipulate, and New York session will distribute. And so my bias was actually bullish because, and it's clear on NQ. Um, this is previous day morning. So when I mark my times, I look at what Asian session does, and here Asian session, for the most part, it did drop. It took out the previous day low, kind of consolidated here. By the time we enter into London session, that's when things are active, because now London session has an opportunity to interact with previous session. So the London section interacted with this previous section by taking out its lowest point. If Asian session made this lowest price point during its session, London made a newer price point. Not only did it make this lower price point, it reversed, which kind of showed this is a really great pull on liquidity, and it's also a sign of manipulation, because if you were to trade this session here for London, you would think, oh, it's 3 a.m., price is going down, we're going to be bearish. But what London does typically, it manipulates. That's its job during that time period. So you always look for manipulation. So it's nice to see that it had a good manipulation. It crossed over this Asian line and went up. So my expectation for the market in this space was bullish, because if there was previous day manipulation with reversal, then I expect current session to be a continuation. So I was expecting bullish um, presentation. So I go by fair value gaps and liquidity draws. So when I saw this happen, I was ready to kind of mark out my fair value gaps. And so I marked out fair value gaps kind of here, really just over here. But the fair value gap was invalidated when price reversed. Price reversing makes sense because you're either going bearish or price is just pulling back or being in a drawdown before it goes back up bullish. Other things that I keep in mind is that this is a pretty serious key level. This is the previous day highest price point, and this is the Asian session highest price point. So when I saw price go above these two and create a new high for London, then it was understood that possibly price would, reverse back, because price, to me, I look at it like a magnet. It's always attracted to itself where it was previously at. So price was here previously, it's going to return back and be attracted to itself again. So looking at that, I now started looking at bearish because now price is closed over, and we also had this break of structure, which let me know we're no longer moving in this bullish direction, we're going to move bearish. So this fair value gap was invalidated or inversed or what have you. And so now I looked for bearish fair value gaps. I looked for, that's not it. I looked for bearish fair value gaps and I got one here. And once I saw this gap here, I dropped down to the 1 minute and I looked for price to show that it respected and recognized that, but closed out of it. Once it closed out of it, I put my short position here. I aimed for this previous day, or excuse me, this Asian low, and kept my stop loss kind of short somewhere in this block. I could keep it above the swing high, knowing that NQ moves a little bit more erratically, but I kept it within this fair value gap. And it didn't hit my price target, but because I trade both NASDAQ and ES, I did the same sort of comparison at the same time. And this green arrow was literally my daily bias, basically. So same thing with ES. It also, at some point, I expected it to be bullish, but price closed beneath it. Break of structure happened. Fair value gap was invalidated. I created my own fair value gaps on the 5 minute. Let's see. I want to make sure it is the right one. Yeah, there was this nice large fair value gap here. I went down to the 1 minute to look for where I would execute from. Price had closed here. I went in with a short position. I was a little bit late. I honestly didn't get in right there. I got in probably here. I definitely got in before my typical macros period, because I do notice that this strategy does present itself pretty early. It presents itself at all time frames. It's price is fractal, so it's in every single time frame, and it's at the beginning of the market, middle, macros not. But I had such good momentum, good volume. The fair value gap was respected early enough, and so I went for it. Put my stop loss above here. Now here, ES did hit the fair value. It hit my TP, and because ES and NQ they kind of mirror each other in movements. Once I saw, this is hard to see. Once price hit my take profit here, even though it didn't hit it here, that was my signal to get out. So it hit take profit on ES. It didn't hit it, but on NQ, but it got pretty darn close. NQ is actually my lagging. It took longer to kind of get here. In fact, NQ has just now hit take profit at 10.18, what ES had hit back at 9.47. So I initially entered in on 2 contracts for ES, 2 contracts for NQ, got out of both, and ultimately I'm copy trading on 5 accounts. So 1768 equals 88 or 8.8K made. So yeah, once I got out here, I took my profits. I'm glad I got out. This is just always a reminder to draw your key levels. It's important to know when to get in, but it's almost as important, probably more important, to know when to get out, because all that work that you put yourself through to get to this point literally goes away if you don't get yourself out. So aside from not trading within my regular time frame, had I waited until, let's see, I waited until 9:50. I know this is terrible. Maybe I just wait here. So price action actually worked pretty well today, because it followed its own rules, or my rules in my head, which was, if I looked for fair value gap during the time frame that I normally trade, which is between 9:50 to 10:30, I would see the fair value gap was actually formed here at 10:57. I would have taken this trade. Once it closed out, I would have set my stop loss here and kept, or excuse me, I want to take my take profit there, set my stop loss. Knowing myself and the market being in that I would have really set my stop loss at the top of this fair value gap somewhere here. So my return on my risk to reward would have been 1.76. And I would have taken my profit once I hit this mark. So there was still another time for me to enter into the market here. I didn't take this. I was telling my sister I was going to take it, but I decided not to because I didn't enter on time. One thing I learned very quickly, and what I keep reminding myself, is that you have to enter at the right time too. Sometimes being late, like if you can't see it, you don't chase the price. So yeah, New Year's Eve, I wasn't even sure there'd be much volume today, but there was. There was also a red folder day, the unemployment claims. Um, Obviously, this was at 8:30. This may have been the movement that caused price action to be so good, in my opinion, though the daily bias is still going to take place in my mind, just based on how market structure works. It's going to take out, obviously, these key levels here. Um, if NQ is able to, it'll try to take out London session low here and maybe previous day low or this draw before it ultimately goes back up and take out, tries to come back and maybe hit this previous day or draw or this previous day price. It'll take it a second, but you can see that price is reversing in these key levels, so it's possible, um, that might happen. Also, when I look at Forest Factory, which I look at every day when I'm determining like what, if I should enter, if I should not. Obviously, when you see bank holidays, it's not a good idea to enter in. Um, but I use price action to determine if it was safe. And I noticed that unemployment claims, based on its forecast, predictions and what the actual predictions were, because it was a bit lower, I kind of expected bearish, sentiment. I don't know if that's completely accurate, but I noticed with CPI news, if your forest forecast is higher than the actual that presents after the meeting or after the folder thing, you can expect bearish sentiment, at least for this time period. Not for the whole day, not all the time, but at least for that time period. So that's trade recap. Um, yeah, let's see how the new year brings us in.